I think it's fair to say that there's been a lot of genuine deferrals for initiating a deal.
We don't have an openly politicised judicial appointment process, but we do have judges behaving in the same way as the US Supreme Court is.
Ambushing someone or surprising, it just would not be taken well here. Taken well by the employees, but also taken well by the courts who deal with these things.
There's a lot of heat in the argument now because of the situation on housing. It's a really hot topic, and nobody seems to have a silver bullet for the cure.
They raised $7.2 million from the start to up to the point of listing. A lot of that money went out in advisory services.
Welcome to the Weekly Wrap, where we go over the top video stories from the past week. First up, NBR launched its 4th annual Dealmakers series this week, focusing on merger and acquisition activity in the Australasian economy. Here's a recap of what the team covered on nbr.co.nz.
Data obtained by NBR clearly shows a massive drop in the aggregated level of deal value in the year to the end of June 2024 compared with last year. In this, the 4th edition of Dealmakers, we'll delve into the data and extract insights from more than 20 of the country's top M&A advisors and counterparties. While the confidentiality of deal consideration always makes such measurements difficult, the slumping trend is hard to ignore.
I think it's fair to say that there's been a lot of genuine deferrals for initiating a deal. So for private equity, they've been waiting for, rate cuts to be initiated, waiting for business and consumer confidence to start to trend back to long-term averages. And they've been pretty focused on their portfolio companies. So we're only just now starting to see an influx of inquiries around starting a process back into this year or next year. And similarly, for a lot of our private clients, where they've got the luxury of choice, they've often elected to defer a sale process until later this year or even early next year, rather than commencing it in the first half of the 24 year.
We asked whether the adverse conditions during the year have played into buyers' hands, if anyone's.
I think it is a buyer's market, and we see that in the deal terms coming through. I'm seeing a hell of a lot more holdbacks, escrows, earn-outs, all of the usual sorts of levers that buyers exert when they've got a bit more commercial weight. But quality assets remain immune from that sort of thing. So, when we've acted sell side on quality assets, those sellers have been able to drive sort of terms equivalent to 21, 22.
Deals still taking longer to get over the line though?
Yeah, for sure. Which is giving buyers the opportunity to take a bit more time on DD. Time, as we've observed in the past, time kills deals. So I think deals, I've seen a higher rate of deals falling over.
But there is light at the end of the tunnel, says Justin Murray, Executive Chairman of investment banking firm Murray & Co., which has a pipeline of quality work again after a prolonged period of uncertainty and tentativeness.
I'm really bullish on the next 12 to 24 months. I'm not at all blind to the fact that the consumer at a retail level in New Zealand at the moment, things are really challenging. And I think that goes on for a little bit longer, but the dynamic we're seeing in the M&A market is already rebounding quite strongly. And, as I think I may have mentioned before, the corporates and the financial sponsors are seeking to position ahead of a forecast improvement in the economy. The easing of rates is supporting that. We already have a better pipeline naturally than we had this time last year. We think that the prospects are pretty good.
From a legal perspective, Bell Gully partner Anna Buckley says her firm's been as busy as last year, but has seen a noticeable uptick in activity in the second half of 2024.
Well, there certainly seem to be some industries where the economic conditions don't seem to have had an impact. I think a really good example of that is the New Zealand tech software space, where we've seen M&A transactions continue to happen, and I think that's just a reflection of, the continuing growth of AI, those companies being attractive to either international players to add on to their existing offerings or other private equity investors to take them forward. Another trend that we have seen is there's some companies that have got non-core assets that they, as part of rebalancing their balance sheets, they've decided that they need to exit out of those. There's a bit of work around preparation for exits of existing investments by private equity. We haven't seen a lot of that, but there's certainly preparations being undertaken. And as part of that, we've started to see what I'd call a two-stage exit for those investments. So where you may bring in a investor that will take a chunk of it, then looking to exit in sort of the medium term out of the entire investment. So we've sort of seen a bit around that space as well. I think the other trend that's been really interesting in the take private space is the continuing growth of institutional investors to have a view on offers that are being put on the table to public companies and whether those offers should be put forward to shareholders.
The dearth of new listings on the NZX and the prospect of more listed companies being acquired into private ownership by trade and financial buyers has prompted NBR to ask advisors what can be done to improve the attraction of local public markets for growing companies. NBR co-editor Hamish McNichol has been covering that aspect. Hi Hamish.
Hi Will.
So what are some of the suggestions that have been flowing from the advisors as to how we can get the NZX cranking?
One of the key things that they've been engaging Commerce Minister Andrew Bailey on is this idea of sort of levelling the regulatory playing field, particularly against the ASX. So the NZX requires any company that's listing to provide sort of certified financial forecasts 2 years for 2 years' time, so 2 years ahead of where you're listing. And I mean, as we've learnt over the last couple of years, it's really difficult to do, and you can be quite badly on the hook if you get those wrong as well. And so most of the people we spoke to for this year's Dealmakers have honed in on that and said, yeah, look, it's really difficult, it's expensive, the burden is just one of the major things that's putting people off listing on the NZX. That said, a few others have sort of cautioned that yes, that's all well and good, but you also don't want the other side of the coin where you just remove those and then, you know, you're welcoming all manner of people to the public markets with no prospective financial information. There's a couple of other things that people have thrown in there. The climate-related disclosures regime, which we've spoken about a lot at NBR and written a lot about. Turners, the listed car company, just the other week was talking about how its compliance with that regime has cost it more than $1 million over the last couple of years. That's also seen as another big hurdle. When you compare that to other jurisdictions, that's a lot more onerous and captures a lot more people. And in a market where NZX listings or listings generally around the world aren't that forthcoming, any extra deterrent like that really puts people off.
So all of that notwithstanding, what's the sense you've been getting from your interviews about the level of activity at the moment and heading into 2025?
Yeah, so you hear a lot from advisors that businesses are prepping themselves for sale and have been doing so now for, in some cases, at least a year. So there's a lot of businesses out there that are interested in exits, are interested in selling. They've just been waiting for the right time. Views are mixed as to whether we'll see a bit of a flurry before Christmas or not. You had the Contact Manawa deal announced just recently. We've obviously had Arvida has just been taken private as well by a private equity firm. So there are big deals out there and there's plenty more in the pipeline. But the themes that we've covered this year of deals taking longer, being fewer buyers out there, diligence taking longer, all that sort of stuff is very much still the state of play. That said, you know, interest rates have started to fall. That all helps with the cost of capital for these firms that are out there looking to buy. But also, you know, we're getting these strong rate cuts now because the economy is in a lot of trouble. So there's a lot of businesses out there that are still really struggling. And that presents an opportunity for trade buyers as well, those that are a bit stronger. We've seen capital raises for the likes of Auckland Airport, Fletcher Building, which, you know, isn't in a strong position. But there are companies out there that are sort of shoring up their balance sheets to try and take advantage of this bottom as we approach it, if we're not already there. So, look, I don't think we're returning to the sort of post-COVID flurry anytime soon, but after a pretty lumpy 2024, expectations are pretty positive for 2025.
And head to mbr.co.nz for more as NBR analyses the deal makers of Australasia. Roger Partridge says the Supreme Court is blurring the line between its role and Parliament's role of making laws. Political editor Brent Edwards with this.
A new report has warned the Supreme Court is overstepping its boundary and threatening the balance between the courts and Parliament. I'm joined by the report's author, New Zealand Initiative Chair, Roger Partridge. Well, what are your specific worries then about how the Supreme Court is operating?
What we're seeing is a power struggle between the courts and Parliament, and it has potentially far-reaching implications for our democracy and for the rule of law. For non-lawyers, the rule of law connotes ideas like the impartiality of the judiciary and the consistency and predictability of judicial decision-making. The Supreme Court, in a series of increasingly misguided decisions, is blurring the line between its traditional role of interpreting and applying the law in disputes between particular litigants and Parliament's role of making the law. And the US is a cautionary tale of what happens when judges become lawmakers. They politicise the judiciary. The activist role of the Supreme Court in the US has led to less predictable and clear laws. It's led to a decrease in the impartiality or the views of the perceived impartiality of the judiciary. And it's led to an erosion in the democratic legitimacy of the US legal system.
But in the US, I mean, we know, depending on who's president, when a vacancy comes up, they're trying to appoint either Conservative or Liberal. I mean, it's a very open sort of contest, isn't it? We haven't got to that here,
we don't have an openly politicised judicial appointment process, but we do have judges behaving in the same way as the US Supreme Court is. So rather than limiting themselves to interpreting and applying the law, which is their primary function, they're extending into a lawmaking role. And there are dangers in that, and our Supreme Court seems blind to them, but is taking us off on the same dangerous path as the US Supreme Court.
Well, let's talk about some of the examples you raised. And I think, for instance, the 3 strikes law and the case where the Supreme Court overruled because of kissing someone on the cheek.
Yeah.
And I think, but wasn't that because, I mean, the sense always was with 3 strikes, it was 3 strikes for 3 serious offences. Wasn't them applying the law in a sensible manner?
No, it categorically wasn't. Now, we might all, or many of us might dislike the 3 strikes law, and I, for one, did. But it was absolutely within our democratically elected Parliament's prerogative to pass the 3 strikes law. And it did so in explicitly saying that it applied notwithstanding any other legislation to the contrary. Yet the court ignored that and read it down. The strong dissent from Justice William Young, one of the Supreme Court judges, said this is not applying the law, this is rewriting the law, and it's not Parliament's function. And when our courts start to think they can impose their own views on what the law should be, then we don't have the rule of law. We've got something that's much less predictable and certain than the rule of law. And we have judges undermining the sovereignty of Parliament, which is a bedrock of our system of government.
I mean, the Coastal and Marine Act is another one, and obviously we know that the government is moving to make amendments because it hasn't liked the Supreme Court rulings around that. Yet you've got other politicians who've said that legislation they opposed, for instance, Winston Peters says that, because it clearly was giving customary rights to Māori around.
Yes, and the judgments on where those policy settings should be made in our constitution are for Parliament, not for the courts. So Parliament determines through the democratic process what it wants the big social policy decisions to be. We can't have unelected, non-politically accountable judges second-guessing Parliament. That throws the law into disarray and it undermines our democracy.
I mean, I don't come from this from a legal perspective, I guess. I come from as a journalist looking at the politics of it. I'm just wondering for the court, at times, sometimes it's not necessarily clear what Parliament means. And I wonder too, given MMP now, we get legislation to suit one party in a coalition, and sometimes there could be an argument that it's always a little bit blurred the lines because of the political tensions.
Well, let's unpick that. There's two things you've raised there. Sometimes the Parliament is not as careful as it needs to be in stating precisely what it wants. And that can encourage the courts to step in. In fact, it does. So that's one issue. And Parliament should be careful to make sure it says what it means. But when Parliament has said what it means, as in the Marine and Coastal Environment, Coastal Areas Act, exclusive and continuous are the words Parliament's used, and the courts, not the Supreme Court, the Court of Appeal and the court below, the High Court, the High Court, interpreted exclusive as including shared exclusive and continuous meaning interrupted, including interrupted. So so one thing, Parliament must be careful to ensure that it says what it means, but where it does say what it means, the court should stay in its lane and apply the law. As for MMP, well, that's the system of government New Zealand's voters chose when we went to a referendum in the early 1990s, and the courts must respect that.
Yeah, I mean, I meant the reference to MMP was it ends up the legislation, having these kind of trade-offs to suit one party over that.
Well, it can do, but again, that's the prerogative of Parliament to make those trade-offs, and the courts must respect that.
Well, in terms of the prerogative of Parliament, I mean, you put up a range of kind of responses you say that can be taken to stop this judicial activism, but isn't the clearest one, the first one, is if a Parliament sees the courts acting in a way that they don't intend, they therefore change the law to make it very clear what they intend?
Yes, and that is Parliament's most primary tool and its most blunt instrument, is just to, it sits above the courts in our legal hierarchy, and it can say, that's not what we meant, it's not what we said, and it can pass legislation to clarify, if you like. Or it can do more than that. It can actually it could actually say, no, that's clearly not what we said, and the court's got this wrong. And it shouldn't hesitate to do that. It's absolutely constitutionally legitimate for the court to do that. Labor did it in 2021 in response to a Supreme Court decision in D and the police concerning the retrospective application of the sex offenders register. And the current coalition government is proposing to do it in relation to the Marine and Coastal Areas Act. So that's the first tool for Parliament, and its most blunt one. It's a tool Parliament has exercised in the past only sparingly, but that's because mistakes by the courts have been more incidental than intentional. But a court that intentionally takes the law off in a different direction from Parliament's intent can expect to be overruled more often. So that's the first tool. But there are other institutional changes Parliament can make to keep the courts in their lane and to reduce the risk of judicial overreach. They can pass guidelines giving directions to the court of what the rules are they should follow when interpreting Parliament's words. By Parliament's words, I mean statutes. And there's a trio of things we recommend in the report. And I think there's a role also for the Attorney-General to be particularly careful in making appointments to the senior courts, to the Court of Appeal and to the Supreme Court, to appoint judges that show a respect for parliamentary sovereignty and for the rule of law, and generally for judicial restraint. Not for this idea we're seeing increasingly from the current Supreme Court, that it's their task to take the law on a journey to match their view of society's changing values. That's not the role of the courts, that's the role of Parliament.
Don't do that. Employment lawyer Shelley Eden comments on Tesla sending managers to the homes of workers on sick leave and why that wouldn't fly in New Zealand. For a look at what's driving this story, here's Fiona Rotherham.
In this week's Toil and Trouble, we look at the rising problem of absenteeism in the workplace. In Germany, Tesla has defended its executives taking the unusual step of visiting employees at their home while they were on sick leave. So what's the background to the Tesla case in Germany?
Well, it seems to be from a concern about rising levels of sick leave being taken in conjunction with staff shortages and kind of issues with production and falling productivity rates and all this kind of thing. And so from that, Tesla seemed to be saying one of the things we've noticed is a big uptick in sick leave, and so we're going to try and do something about it. And I think they got a little bit creative there, but it's quite interesting because in the article they talk about how this is just our standard practice of what we do. So, yeah, it's an interesting approach that they're taking.
Could that happen in New Zealand, or would it happen here?
So I'm going to put it out there and say, no, don't do that. Look, I don't think it would be seen as a reasonable action here. I think it feels instinctively wrong, right? But what it's also doing is it's checking up on employees, I guess, as to the validity of their sick leave, and there are other ways of doing that. And ambushing someone or surprising, it just would not be taken well here. Taken well by the employees, but also taken well by the courts who deal with these things.
So a survey out a year ago by Business New Zealand and Southern Cross showed a big increase in absenteeism in the workplace, so, at a cost of about $1 billion to the economy. What do you think employers can do to address the issue rather than, going and visiting people in their homes?
So it depends on what's happening. So it's kind of a complex and multi-layered issue, and it does need to be thought about kind of on a case-by-case basis sometimes as well. But essentially, are you looking at someone who is malingering and is not actually unwell? Because there's a process for that. If someone is being dishonest about their sick leave, that can lead to the dismissal of their dismissal, end of their employment. Or actually, have you got issues with absenteeism, sick leave uptake, and what are the factors that are leading to that? It can be really complex. It can be to do with staff shortages, which was said in the Tesla case. It can be to do with people being unhappy at work. It can be to do with stress. It can be to do with the job, or actually there can be genuinely unwell people, which we do have as well. So really it's about having a process with those people to try and understand what's going on for them within the boundaries of privacy and work on a plan for that, for those individual people. Now, ultimately, if a person is not attending work frequently enough, then you can end employment either by way of, because they're not meeting the tasks of their job or because there's a medical incapacity issue, but there's different issues. You can have people on long-term sick leave, repeated sick leave, there's a whole lot of things that need to be considered. It just needs an individual tailored approach, really.
And really it's looking at patterns of work leave as well, not 10 Fridays off in a row type thing.
That's exactly right. And sometimes it's really good to sit down with the employee and show them their pattern and say, look, what we've observed is that, Mondays are not good days for you. And in that you'd be saying, and we need you to attend work on Mondays. It's not okay just to take sick days because it's Monday. We need to have you at work and present. We've got a contract with you that you attend the office for a certain number of hours per week, subject to normal regular sick leave and annual leave and other things. We need you to be there. And that's a reasonable request to make of your employee.
Some workers see their sick leave as an entitlement, and I've had this conversation with my son. He said, well, I might as well take those days off because they're still owed to me. How do you deal with that issue? Because it's not an entitlement as such, is it?
No, exactly. It sits there as an entitlement, but it is for when you are sick or when a dependent is sick. So it sits there waiting, but it's not just there for use in the same way that annual holidays are for use. And depending on what the person's taking them for, it may not be honest use of sick leave, and that could be a problem. If a person is taking them because they are genuinely unwell, and then they go, well, that's good, I've got this entitlement sitting here, I'm unwell, and even I've got a lot of days owing and I'm still quite unwell, so I'm going to have that extra day, that is legitimate and that is fine.
So if the worst comes to the worst and you do need to sack someone, is it the same process as any other reason for sacking someone?
Essentially, yes. It needs to be a fair and reasonable process. The person needs to be consulted about what's happening to them. They need to be given time to respond, the opportunity to have support through the process. And it's really about clear communication. What's at stake? We're worried. We don't think we can continue to operate like this because you're not working the hours we need you to work, either maybe because you have an illness or because there's something going on. Well, let's explore that and find out and help us to make a reasonable decision around your employment.
Is mental health a bit more of a minefield for employers to deal with?
It is, and we've got some helpful case law emerging talking about how we need to deal with our employees who have mental health issues. It is hard because we don't always understand it. It can be intangible and hard to see, but there's an increase in mental health issues across the workforce across the world, and there's an uptick in that as well. And so we do need to actually, I think, employers need to inform ourselves and educate ourselves on how do we manage this particular type of illness, because it's still a type of illness, it's just a different type of illness.
One of the things I've noticed, and particularly with bigger corporates, is this, work to do well-being with their staff. So looking at, getting them more fit and active, and things like cessation of smoking. Is that a good way of perhaps dealing with absenteeism?
Yeah, look, I really do think it is. I think if you're looking at your absences holistically and looking at the causes and the contributors, then having a nice workplace where people enjoy coming to is going to make a difference. Having work that is rewarding and interesting is going to make a difference. And employees' health, their personal health is obviously going to make a difference. Employers can't overstep and say, you can only come to work if you've done your 10,000 steps every day. Got to be a bit careful there. But I think they're great things. And you see this with some employers where employees are getting access to healthcare and access to support that they may not have otherwise had. It's got to be a good thing, right?
And just finally, what's your thought on duvet days, which is, allowing workers to take a day off at, quite sudden notice when it's not part of their annual leave?
So I think that's a sick day, probably. If I need to have a day where I can't quite face the world because I'm stressed or I'm anxious or if, there's too much going on or I'm a bit unwell or you're mentally fatigued and drained, well, that's me taking a sick day. And so I think we can just include it under that. I see quite a lot too, people saying I'm taking stress leave. So stress leave is sick leave. It's sick leave because you're stressed. A duvet day is sick leave because you need to climb under the duvet for the day, can't face the world. Some employers would not be super happy with that as a concept. They would consider it not to be a good reason for sickness. So you have to be careful as an employee of just announcing, well, I'm off today because I just can't cope with the world. But it will usually be an underlying issue that's going on where they're actually not well enough to face work and not mentally well enough. And that's a valid reason for having a day off work.
Tinkering with tax. That's what Australian correspondent Lachlan Colquhoun is covering in this week's Underarm column.
Incentives and tax breaks for property investors were an issue in last October's election, and some of the same issues are popping up again in Australia. Where New Zealand has the bright line test and tax deductibility on interest, Australia has a system called negative gearing alongside discounts on capital gains. With an election coming up across the ditch and the Labour Party in power in Canberra, there have been recent suggestions that the government could change negative gearing to shore up the national budget. Lachlan, many of us probably aren't totally familiar with how negative gearing actually works. Do you want to start off by explaining that?
Sure. So we've had this in place since the 1930s. It came in 1936 as a scheme designed to encourage property investment. So under the negative gearing rules, you can deduct interest on your loan, strata fees, council rates, land tax, and any maintenance on the property from the rental income. So this gets then factored into your personal tax, and the wash-up is at the end of the year. So many people deliberately make a loss on this calculation, and the average loss is an estimated $5,000 per person. And it means that many people are able to reduce their personal incomes and lower their tax. The second part of the scheme is our capital gains regime. But what happens is that if you have an investment for 12 months or more, then you only pay a capital gain on 50% of the gain that you hold if you have the property for more than that time. So given that property prices in Sydney, where I am, for example, they're supposed to double every 10 years. And in that time, the average person would have claimed $50,000 in tax write-offs. A lot of people find it very attractive. And around 1.3 million Australians negative gear investment properties currently.
So that many Australians, average of 5K. How much does it cost the public purse overall?
Well, estimates vary. The Treasury estimate is $3.6 billion per year. But the Australia Institute, which is a left-leaning think tank, says that when you factor in the capital gains tax concessions, it's more than $20 billion per year. And they set that against the $8.4 billion that state and territory governments spend on public and community housing. So they say there's a big opportunity cost. We're in the middle of a housing crisis. It's a hot topic here. And so they say that what the government gives to investors should instead go into other housing projects to advantage other sections of the population.
Tax is always a complicated issue. What are the arguments for and the arguments against making these sorts of changes? Well,
it always comes up around election time, as I gather it did in New Zealand. Labor said they were going to change the rules in 2019. It's considered one of the factors which lost them the election. It's rearing its head now because of the housing crisis, unaffordability, rents and prices are spiralling, many young people locked out of home ownership. Part of the argument against it is that it benefits richer people. I think the Parliamentary Budget Office found that 50% of the benefits of negative gearing go to the top 10% of income earners. There's also a claim that while 1 in 3 surgeons negative gear a property, only 1 in 10 teachers or nurses do the same thing. So there's a claim that it's inequitable. There's also a belief that it keeps housing prices elevated, although there's another think tank at the University of Melbourne, a more centrist one, the Grattan Institute. They reckon it only adds about 1 or 2% onto property prices. So in its favour, the coalition opposition, the Conservative centre-right opposition, they'd love to run a scare campaign on this because they always win, it always gets them votes. They have a different view. They say that if you remove these subsidies for investors, then they would have to charge more in rent, because it would cost them more to maintain their properties. So they say that it would lead to a spiralling in rents, and that, and in fact, nobody would be better off.
Sounds all very familiar, Lachlan. Obviously, with these sorts of things here in New Zealand, there's a lot of talk. Nothing actually ever ends up happening. Do you think there will be any changes on the back of this in Australia?
No, I don't think there will, Hamish. It's a bit of a sacred cow. It's a little bit. There's a lot of heat in the argument now because of the situation on housing. It's a really hot topic, and nobody seems to have a silver bullet for the cure. But there's there are a few heresies in Australia. One is the idea of taxing the family home. The other one is doing away with the public health system through Medicare, and the other one is now negative gearing. Labor would probably love to change it, but the political implications are just dangerous, because we have an election due next year and things look as if they're going to be pretty tight. But also, even people who don't use negative gearing aspire to be able to use it one day. And so I think their view is, I think that this has been tested, that a lot of people who don't use negative gearing say, yeah, I'd love to use it one day, so don't do away with it, because by the time I get into a position of being able to use it, I don't want other people to have had the benefit of it all those years in the past when I can't use it. So for those reasons, I can't see it changing, but it's one of those perennial things in Australia that comes up all the time that's a real issue right now.
And head to mbr.co.nz to read more on that. Medicinal cannabis company Greenfern Industries has had what Shoeshine describes as a checkered past since being set up in 2018. Fiona Rotherham has the latest on the budding firm.
Listed medicinal cannabis company Greenfern Industries is soon to launch another capital raise aimed at bringing in around $1 million. It hasn't had much luck in recent raises getting the money it sought, but Chair Marvin Yee says the company has turned over a new leaf. Well, senior journalist Fiona Rotherham has been looking into the company. Why does Yee say the company has turned over this new leaf?
Well, he says when they did the compliance listing in 2021, that the adults came into the room, basically. So you had people previously involved in the company, as many in the industry were, that didn't really have that corporate experience. Ye's saying that they're in the best position they've ever been in. He's a relatively new CEO. They've got a new chair. They've got a new CEO, Elizabeth Plant, who's got more technical knowledge.
Elizabeth
Plant, yes.
Sorry.
I know. And they've got a new growing facility, and they've got new cultivars that she's brought in. So all of these things. They've also got a joint venture for a hemp protein powder that's in food trials that could come to market next year. And, of course, there's the new export changes, as you know, to the medicinal cannabis rules that make it easier for all companies. So all those things add up. But the trouble is, to bring those to fruition, they need more capital.
Right. Other medicinal cannabis companies, as you're saying, are also raising money to ramp up production, given those changes we're talking about to the export rules. Why would investors choose Greenfern over those other ones?
Well, that's the question.
Yeah.
And you just pointed to what I've just alluded to.
Right.
But one of the competitive advantages they claim is having a power station adjacent to their facility, and power's the big expense, right, for cannabis growing.
Right.
But the trouble with that plant, which, they bought off a related party, which they didn't initially disclose, so there was a bit of a controversy around that. But the plant is under really strong resource consents about how much water they can draw from it. And normally it would work 8 months a year, but because of the dry weather in the last 18 months or so, it's been severely curtailed, and they have had to draw off the grid anyway. So they say it's a competitive advantage and they can sell the excess power back to the grid, but in reality, it hasn't been working. It needs about a $1 million at least upgrade, which they haven't got the money for, and they are trying to get the resource consents changed, but good luck with that.
Okay. As you've mentioned before, Greenfern has had something of a checkered past. Can you tell us what that involved?
Yeah, so you've had controversies. One of the first was Tim Johnson, a former director, and one of the shareholders, founding shareholders, you know, there were online conversation leaked around him talking about pumping up the, you know, stock so investors feel it's got more substance and things like that, which ahead of, their first crowdfunding offer. And, you know, he called it over-exuberance, not called
Right.
what you will. And then during the second crowdfunding offer they did, they didn't include details about this related party buying the plant off Johnson primarily.
Okay.
So there's been things like that, but also if you have a look, they raised $7.2 million from the start to up to the point of listing. A lot of that money went out in advisory services to people like former Chair Brent King or John Hussey, who was head of growth and a contractor, or Dan Casey, the former CEO. So you had a lot of money coming in, but also a lot of money going out pretty fast. And one of the egregious things I think that happened too, they had a shadow share scheme, which was very, very generous. So they sort of got triggered every time they raised capital. They gave themselves all a whole bunch of shares, you know, at a really, you know,
Right.
price set by the directors. So things like that were happening that, you know, probably wouldn't happen in a listed company. And I think also one of the things was, just prior to listing, John Hussey and Dan Casey got new employment agreements, which you have to say were pretty interesting. I mean, they got $155,000 a year, which is okay. I mean, that's a pretty standard rate for a CEO, but it included provisions around termination, that if they lost their jobs, you know, within 3 years they got paid extra, and you know, within 5 years they got paid a sort of amount as well. So it was all pretty well set up by the time they got to listing.
Okay. So if we fast forward back to what they're doing now, trying another round of raising $1 million, what will the money be actually used for?
Well, it just needed to survive. Basically, they need the working capital. They've been existing on really high interest loans from the chair and from other directors, and you know, whatever they've been able to get in the door, which hasn't been much in recent times. So they really need that money to bring their plans to fruition. And you know, there is export markets out there that they're hoping to go to in Australia and Europe, but they can't do it without getting some more money in the door. So it's really make or break time for the company.
Thanks again for joining us. Our news team is back from 5 a.m. tomorrow with the latest business news you can use on nbr.co.nz, and join Simon Shepherd from 5:30 tomorrow for a look at the day's top stories. See you next week.